The financial turmoil surrounding First Brands, a seemingly ordinary manufacturer of car parts, has sent shockwaves through Wall Street, sparking intense anxiety among financial experts. This story is a cautionary tale, highlighting the potential pitfalls of complex financial systems and the impact they can have on the broader economy. First Brands, founded by Malaysian entrepreneur Patrick James, began as the Crown Group in Ohio. Through a series of acquisitions, James built an empire that included well-known brands like Trico, renowned for its windshield wipers. However, the company's rapid expansion was fueled by debt, and its recent bankruptcy filing has exposed a web of financial complexities that have left investors rattled. But here's where it gets controversial. The company's use of off-balance sheet financing, a practice known as factoring, has raised eyebrows. By borrowing against invoices and keeping debt off its balance sheet, First Brands transformed itself into a financial entity rather than a traditional supplier of auto parts. This strategy, while not inherently problematic, becomes risky when the size and holders of that debt become obscure. And this is the part most people miss: the potential impact on the wider financial system. The collapse of First Brands and similar companies like Tricolor, a Texas-based auto lender, has raised fears of a contagion effect. The private debt market, which has grown significantly since the 2008 crash, is now under scrutiny. Ben Laurie, a professor of accounting, suggests that both First Brands and Tricolor were catering to consumers under economic pressure, selling either cut-price plots or older cars. In a market that's not thriving, companies may be tempted to engage in risky financial practices, leading to potential disasters. So why should you care? Because the fall of First Brands could be the first in a series of dominoes. If more companies with similar financial structures fail, it could trigger a wider crisis, impacting not just the auto industry, but the entire financial system. This story serves as a reminder that even seemingly mundane industries can have a profound impact on the global economy. It's a complex web of connections and risks that we often overlook. But as history has shown, these intricate financial systems can cause severe problems, leading to recessions and market meltdowns. The question remains, are we headed for another financial crisis? And if so, how can we prevent it from spiraling out of control? What are your thoughts on the matter? Feel free to share your insights and opinions in the comments below.